Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Canada chooses Carney. Former central banker Mark Carney leads the Liberal Party to a fourth consecutive election victory, but looks set to fall short of a majority. Lifting levies as Donald Trump prepares to mark 100 days in office. The US president looks to ease tariffs on foreign parts for cars made in the United States. Plus, a big beat for HSBC. Europe's largest bank says it will buy back $3 billion of shares as profits smash estimates. We bring you more on company results as they cross the terminal. Right now, Deutsche Bank in focus. So staying on the banking space, Deutsche Bank's first quarter net revenue coming in with a beat. 8.52 billion euros versus the estimates of 8.3 billion euros. Deutsche Bank stock is up about 35% year to date. Here is the crucial fixed income and currencies sales and trading revenue. Also a solid beat in the first quarter for Deutsche Bank, coming in at 2.9 billion euros. The estimates had been for 2.73 billion. So it's a beat, as the analysts had expected, on fixed income and currencies. When it comes to adjusted costs, they're coming in just above 5 billion euros in the first quarter. The CET1 ratio in line with estimates. But the top line's coming through in terms of profit. It is a beat for Deutsche Bank in the first quarter. Pre-tax net revenues a beat, and fixed income and currency sales and trading also a beat when it comes to Deutsche Bank's numbers for the first quarter. We're going to hear from that lender's CFO, James von Moltke, later in the show. That's at 6:30 a.m. UK time. So stay tuned for that conversation. Bringing you the lines now from the drug maker Novartis. In terms of top line, when it comes to full year sales, expected to grow in the high single digits. For the full year, 2025, they have raised their guidance, Novartis. So it's a raise to the guidance despite all the uncertainty around tariffs and the potential impact there for Novartis. This is a stock that's up 10% year to date. The expectation had been that they would leave the forecast intact. In fact, the guidance for 2025 for Novartis has been raised. Core operating income expected to grow low double digits. Full year sales expected to grow in high single digits. And in terms of core earnings per share for the most recent quarter for Q1, they've come in as a beat for Novartis. So it's a beat on core earnings per share in the first quarter for Novartis, and raising their guidance for 2025. To the autos space now. Volvo Cars, the majority owner, of course, China's Geely, currently coming through. It's a challenged environment, of course, for the auto sector. Volvo Cars coming through with operating income that is a significant miss in the first quarter. This is a big miss for Volvo Cars in the first quarter. Operating income coming in just shy of 2 billion Swedish krona. The expectations, the estimates had been for 3.6 billion. So it's a big miss on operating income. Revenues also coming through with a miss in the first quarter for Volvo Cars. 82, just shy of 83 billion Swedish krona. The estimates had been for closer to 87.5 billion Swedish krona. Volvo Cars saying it is undertaking strategic restructuring of operations in the United States. The company sees redundancies at the operations globally. We will be having then a fascinating conversation with the CEO of Volvo Cars later in the show and getting reaction to those numbers. A big miss. Plans for significant restructuring of the operations in the United States. Let's get more broadly to the markets then. Earnings, of course, a key theme. The focus right now is on the European earnings space. And then, of course, you have mega cap tech names reporting from Wednesday in the US. You are set now for potentially 6 straight days of gains for European stocks. Futures pointing higher by 0.1%. FTSE 100 futures looking to add 14 points. S&P futures up just 5 points, up 0.1%. But then again, in the context of 5 straight days of gains, JP Morgan strategists saying there is, at least in the short term, some potential upside for US equities. Nasdaq 100 futures looking to gain 0.1%. Let's flip the board and have a look cross-asset then. The focus, of course, on the Canadian dollar, given the evolutions of the politics there. The Liberal Party winning and Mark Carney as well, but a minority government, it seems, at least for now. We'll see how the pieces fall in terms of the political makeup for Canada. Currently, the Canadian dollar a little weaker versus the US dollar, down 0.2%. so far. We continue to watch that currency. In terms of euro dollar 113, Brent trading at $65 a barrel, just up, down a full percentage point on oil on concerns about the economy. Gold also seeing a little bit of pressure as well. The yellow metal down currently a full percentage point as well at 3,311 per troy ounce. Let's get to Canadian politics then, because the Prime Minister, Mark Carney, is projected to win the nation's election after a campaign dominated by President Donald Trump's tariffs. Carney's Liberals are on track to win enough seats to form at least a minority government. The former central banker has vowed to boost economic growth and stand up to Trump. Bloomberg's Vancouver bureau chief Thomas Seal joins me now. Thomas, bring us up to speed then. What is the latest on the results for what seems to be a pretty remarkable turnaround for the Liberal Party of Canada?
The Liberal Party would have been delighted with this if you'd asked them even 4 or 5 months ago. They were headed for a historic wipeout under Justin Trudeau. They have done an expedited switcheroo. Trudeau resigned, facing pressure from his own party. They did a quick leadership election. Mark Carney, flirting with politics for years, known well to our UK readers and viewers from his time at Bank of England, swooped in and won resoundingly the leadership contest. And now he's sort of won a general election. However, it's very close. It's a bit closer than most polls were saying. The Liberal Party is only about 1% ahead of the Conservatives in the popular vote, and it's coming down to the wire in certain ridings. So we're going to have to wait a little while longer to see what kind of coalition or agreement the Liberals are going to have to strike to be able to form a government. It's theoretically possible. Perhaps they could still get a razor-thin majority, but it's more likely they'll have to work with other parties. Under Trudeau, they worked with the left-wing NDP, and they may have to do that again. So that's where things are looking right now.
OK, so they may need to look to the left-wing NDP, and we'll watch, of course, those potential coalition combinations if that indeed is the course that they have to chart. What are likely to be Mark Carney's main priorities once that government is formed, Thomas?
The mandate he's been brought in on, he campaigned predominantly on reorienting Canada in the world with an unreliable and even aggressive US under President Donald Trump. He said the US is no longer a reliable partner. The old relationship with the US is over. His first visits within the first weekend of becoming Liberal Party leader and Prime Minister were to the UK and to France to meet with Prime Minister Starmer and President Macron. And so he wants to strike trade deals, boost trade and even, boost procurement in areas like defence with these countries. Canada needs to boost its defence spending, but it doesn't want to necessarily buy more Lockheed Martin jets. It may want to do so with Saab in Sweden, for example. So he wants to form a coalition of more like-minded countries where the US looks like it's broken away from what was a historic partnership.
Thomas Seal, thank you very much indeed on an historic night, an historic day, of course, for Canada. Vancouver's bureau chief on the latest and what it could mean, of course, for the Prime Minister Mark Carney going forward in Canada as he faces up, of course, to those Trump tariff threats and the reality of those tariffs. Meanwhile, President Donald Trump is set to blunt the pain of tariffs affecting the auto industry with a lifting of some levies on foreign parts for cars made in the US. Bloomberg's Valerie Teitel has the market reaction to us for us on this front. Val, lots for you to cover on the earnings front. We've got the macro data coming up as well, and these potential adjustments on the tariff front.
Yeah, that's right, Tom. More softening of Trump tariffs is leading the equity market to trade very positively in the Asia session. On that auto tariff reprieve, the most important thing here is that the duties will not stack on top of the already announced tariffs on aluminum and other metals. There also was a reprieve when it came to auto parts. These manufacturers will be given a partial reimbursement. It will be taken down over time, so there is some incentive for these domestic manufacturers to continue to move their supply chain a bit more domestically. And lastly, the move will be retroactive all the way back from the first implementation of the aluminum tariffs back a few months ago. Now, hey, good news on the tariff front is again good news for the equity market. The U.S. equity market is now on a 5-day winning streak. Take a look at the futures price action. We might be able to make it 6 today. If you can flip on to the chart behind me, I want to point out, though, we are having a great April for the U.S. equity market. market. If we take a look at the move from all-time highs, Tom, back in February, we have now recouped over half of those losses. The S&P 500 is now down only 10% from the all-time highs versus being down 19% at the worst of the drawdown. We also had some notes out from the JP Morgan trading desk saying they're turning tactically bullish on the equity market, seeing more upside from here. Now, that is the good news on tariffs, Tom. The bad news on the tariff front is it's continuing to come into the soft survey data. We had the Dallas Fed manufacturing survey yesterday, had its lowest reading since 2020, and many pointing to the fact that over 50% of respondents said they were going to pass through all or most of the tariff costs onto consumers. Now, there was very interesting price action on the back of this. First thing we learned is that treasuries are beginning to act like a safe haven again. We rallied off the back of this soft survey data. And lastly, it seems like the treasury market and front-end pricing of Fed cuts is less concerned about the read-through through persistent inflation and instead more reacting to the downside risks to growth. Take a look at the 10-year yield in the last three sessions. We've now rallied around 17 basis points.
OK, so a bit of a normalisation in terms of the reaction function of the US 10-year, at least for now. Bloomberg's Valerie Teitel breaking down the market moves to the news that has come through in the last 24 hours. Thank you. Now, most power has now been restored in Spain following that massive electricity outage across the country and in neighbouring Portugal. The cause of the power outage is still under investigation this morning. Bloomberg Spain Bureau Chief Rodrigo Orihuela joins me now. So we've had the update, Rodrigo. Thanks for standing by. Most power has now been restored in Spain. Do we have any clarity on what was behind this and how policymakers are thinking about mitigating the risks going forward?
Well, the issue there is right now to answer that question is that we don't exactly know what sparked this outage. So there was an explanation that it had something to do with the frequency of the tension on the system, but that came from the grid operator early in the afternoon. The government subsequently, the Prime Minister himself subsequently said that there are all theories are still on the table and nothing has been dismissed. So the answer to how this happened hasn't been offered yet, and until that comes, I don't think anybody will be able to say what are the solutions. My mic is falling out. I apologize.
No problem at all, Rodrigo. That's an important update for us, as again the grid operator in Spain is reportedly now saying that full power has been returned to large parts of Spain now. So that issue has at least been addressed. But a dramatic day, of course, for Spain, Portugal and parts of France yesterday. Bloomberg's Spain Bureau Chief Rodrigo Orihuela on the latest when it comes to the blackout, of course, that crippled much of Spain yesterday. Coming up, I'm going to bring you an interview with the Deutsche Bank CFO, James von Moltke, after the German lender's earnings beat. That is at 6:30 a.m. UK time. Stay tuned for that interview. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news today. UK food prices have posted their biggest rise in more than a year this month. That's after supermarkets were hit by a double whammy of tax increases and a jump in the minimum wage. According to the British Retail Consortium, the cost of food climbed 0.7%, with everyday items like bread, meat and fish all increasing. That took annual UK food inflation to 2.6%. Bloomberg has learned that Sony is considering spinning off its semiconductor unit to streamline its business. Sources say Sony would distribute its holdings in its chip arm to shareholders while possibly retaining a minority stake. Billionaire investor Dan Loeb had pushed for years for spin-offs to unlock shareholder value. Loeb's investment firm, Third Point, sold its holdings of Sony ADRs in 2020. And OpenAI now lets users shop for products within ChatGPT. With the new option, users can quickly compare products and click a link within ChatGPT to make a purchase on an external website. It's the latest move by the AI startup to expand the reach of its popular chatbot and challenge rivals like Google. S&P Global Ratings says it's no longer considering cutting Boeing's debt to junk status in the latest sign of a turnaround for the struggling aircraft maker. It says Boeing appears to be on track to recover from strike-driven production halts last year and persistent manufacturing quality problems. S&P currently assigns Boeing a BBB- rating, one step above junk status. Coming up, A big first quarter miss for Volvo Cars, with the automaker announcing a strategic restructuring of US operations. We're going to speak with the car maker's CEO, who's back at the helm for a second time. That's next. This is Bloomberg. Welcome back. Happy Tuesday. Let's get to the earnings story around the auto space with Volvo Cars front and centre. It is a miss in terms of the first quarter revenue for Volvo Cars. Pretty substantial miss. The company also withdrawing its guidance for 2025 and 2026. Obviously, tariffs are a key factor. Very pleased to say we can now bring in Volvo Cars CEO Håkan Samuelsson joining me for the latest. Håkan, the withdrawal of the guidance is one of the standout lines from these earnings for 2025 and 2026. What are the key uncertainties that the business faces?
I think it's uncertainties and turbulence you can read about in the paper every day. I mean, it's of course the future of electric cars. How will that play out? New players coming in on the market, but also mostly I would say the tariffs, which is of course disturbing a global company massively with our production in the US and in China, which now need to be regionalized. I mean, those facilities cannot be used as before. So all of that says let's refrain from giving any guidance and concentrate on really what we can control, and that is something to counteract this rather negative result we had in the first quarter. So that's why we are talking, we would talk about the package worth 18 billion in free cash flow, and that is coming on top of whatever the baseline is. But in the baseline, of course, we have all the actions was planned earlier. So this package is absolutely new action, and the value of that is what we are really giving guidance on.
So to be clear to our viewers, this is a cost action plan at around 18 billion Swedish krona. Where will that be targeted then, Håkan?
It's three areas. First is material costs for the cars. So we will go into a special round together with our colleagues in China and use their buying power, look into their suppliers, and to get out 3 billion in 2026, really. And then it's white collar efficiency package of 5 billion, which also of course will mean layoffs of people in our offices. And the last 10 billion, that is really capex and working capital actions, delaying, reducing investments and reducing our inventory levels mainly. So total value of free cash flow 18 billion.
How many job cuts do you expect to see across the business?
It's too early to say, but I mean, we need to reach 5 billion. I think would be unrealistic to try to say you can do that without layoffs. So it's something we will need to come back to our unions and to people here mainly in Sweden as soon as possible, I would say.
What does the restructuring of the US business mean specifically?
We need to have a more autonomous, more empowered region. The same is valid for China. We see we are entering into a world of regionalization more than globalization. So the region needs to focus more on the activities, selling cars, and exactly what marketing activities and so on we need to delegate to them. And they need to take responsibility also to fill the factory with cars they can sell. I mean, we have a huge factory, which I think is a very valuable strategic asset, but that has to produce cars that can be sold by the sales organization. So we'll give them more responsibility, but also demand more from them.
Are you passing on the tariff to your consumers, or are you absorbing that cost?
Yeah, it's always a mix. I mean, of course, there will be some parts passed to the consumers, and this is not only Volvo's. I mean, all our competitors, they are in the same situation. So I think it's very likely that premium cars from Europe will be more expensive in the US, but I think also unrealistic to believe you can pass everything to them. So it will be a mixture. We want, of course, to hold our volumes, but also, of course, pass as much as possible to the consumer. It's a balance for the sales people.
Okay, so it's going to be yeah. So it will be a mix. Are you planning to add another model to the production facility that you have in South Carolina in the US as you try and mitigate these tariffs?
Yeah, of two reasons. I mean, the factory now is not utilized enough. We are building the new, very good electric vehicle EX90. We build the Polestar 3 as well, but really to bring up utilization, I think we need a conventional or a hybrid car on top of that, and we are looking into that, and we'll do that as fast as possible. So, I mean, higher utilization is good for the cost, but of course also to counteract the tariffs.
And just briefly, you're confident that this turnaround plan will turn around the stock price? It's down about 2/3 since the IPO.
I'm confident that this package will deliver an 18 billion improvement of free cash flow. Exactly where that be on the bottom line, and we have said we will refrain from giving any guidance of that. So that's really what we are concentrating on. I'm quite sure that this will also, of course, bring us back on the more long-term strategic path to a stronger electrified Volvo.
Okay. Håkan Samuelsson, we appreciate your time. Volvo Cars CEO on those earnings. We're going to bring you live pictures right now. The Canadian Prime Minister on that victory, of course, in the Canadian elections. Let's listen in.
Remercier les milliers de bénévoles ici ce soir et à travers le pays qui ont donné de leur temps pour cogner au port, pour faire des appels, pour échanger avec leurs voisins et les membres de leur communauté, pour nous donner un gouvernement fort. C'est ça. You know, I chose to enter politics because I felt we needed big changes in this country. But big changes guided by strong Canadian values. Values that I learned at the...
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Canada chooses Carney. Former central banker Mark Carney leads the Liberal Party to a fourth consecutive election victory, but looks set to fall short of a majority. Lifting levies as Donald Trump prepares to mark 100 days in office, the US president looks to ease tariffs on foreign parts for cars made in the United States. Plus, a big beat for HSBC, but Volvo Cars withdraws guidance as Trump's tariffs hit profits. Over at Deutsche Bank, trading unit revenues hit a record. Our interview with the CFO is up in the next minute. I will recap those lines for you right now in terms of Deutsche Bank and the strength that came through, particularly from its trading business. A record, as we said in the headlines, in terms of the first quarter from the trading unit of Deutsche Bank. This stock is already up 35% year to date. The fixed income and currencies business recorded a 17% revenue jump to 2.9 billion euros in that quarter. The first 3 months, of course, to March. That was above analyst expectations, the highest since at least 2013, according to Bloomberg data. In terms of the additional lines that came through from Deutsche Bank, some of the top lines, keeping its full-year guidance for credit loss provisions, the CET1 ratio by the end of 2025 they see as essentially flat year on year. The asset management revenue was higher year on year. That is the expectations. That's what they see year on year in terms of full year for Deutsche Bank. Let's listen into the CFO, James von Moltke, who's been speaking to Bloomberg's Oliver Crook a little earlier on those results.
The crystal ball is cloudy. As we think about it, though, first of all, our company is well equipped to navigate an environment like this, whether it's risk management or the great client franchise we have. As well as the very strong balance sheet, we're equipped to navigate ourselves and, more importantly, help clients through what is an unsettled environment. I think the second thing is strategically, a lot of the things that you're seeing in our environment particularly in our home market in Germany, actually play to our strengths. And so we feel as though we're well positioned this year and in the medium and long term to work in an environment that has brought some unusual circumstances and adjustments. But to your fundamental question, yes, we're looking at scenarios. We're looking at how each of the businesses perform in this environment. Overall, we feel optimistic, but naturally we have to look at in the near term with some caution.
Yeah, and I want to drill into some of those businesses because Liberation Day was 2 days into the second quarter. It's felt like at least a quarter, if not a year's worth of activity has occurred over the last 3 weeks. Can you sort of put a number on us? Can you illustrate for us what trading has looked like over the last 3 weeks?
Well, let's look. If you look at the daily trading in the first quarter, it was very strong, and what April looked like was not that in the first 2 weeks, but then it resumed, I think, a healthy performance in the second half of April, and that's encouraging. Obviously, those first 2 weeks was full of sort of correlations that were breaking down. You know, if you had basis risks, it was a difficult environment to navigate. We actually feel pretty good about how we got through. You know, the markets, businesses, the desks, you know, were absolutely within their risk appetite. We had some weaker days, but we were able to really support clients, provide liquidity, provide prices in markets that were, again, moving in a historical way.
And again, sort of thinking about how this sort of massive impact hits the different sections of your business, obviously. So is this just a scenario where you see trading goes crazy, then lending goes down, origination, deal-making basically dies out? What is the sort of story there?
Well, look, as you say, the crystal ball, there are some things we know. And one thing is interest income for a bank. So having hedged really almost all of our interest risk for this year, that side of the business is in really good shape. The other thing is that the what we would call the more predictable businesses, and particularly private bank, are doing well. Volumes are good, client engagement is good, and so we would view those as just sort of powering through, almost regardless of the environment. But to your point, certain of our businesses that are more dependent on new deal activity, if you like, and origination and advisory, the corporate finance sort of product set, obviously depends on corporate confidence, on the ability to get deals done. That obviously slowed dramatically in April. But as you've heard from some of our competitors, absolutely the case for us. Pipelines are good and strong. And so there is a sort of a backlog of activity ready to move ahead if the level of confidence and stability in the markets returns.
Okay, Deutsche Bank CFO James von Munkel speaking to Bloomberg's Oliver Crook in Frankfurt. And a reminder, we're going to be speaking with Goldman Sachs' chairman and CEO David Solomon later today. You can watch that exclusive interview from the Norway Wealth Fund's annual investment conference. That's at 10:30 a.m. UK time. So, major European banks, of course, reporting this morning with HSBC's pre-tax profit beating estimates and numbers, as we've been hearing from Deutsche Bank and BBVA, also in focus. Charlie Wells is here to bring us up to speed and give us a broader picture of what the earnings story is telling us. Walk us through some of the key numbers. What have you learned from the numbers that are across, particularly from the banking space so far today?
Yeah, well, one of the words I keep hearing this morning is strength and strong. So, you know, we heard from Deutsche Bank. I think he said the word strong quite a few times there. We've heard from HSBC this morning. You know, they had a significant beat. They announced that $3 billion buyback as well. Their management teams were also talking about a strong quarter. And that's looking back. I think if you look at HSBC, they got a boost from wealth. They got a boost from FX. They got boosts from debt and equity markets. But also there's this idea of forward guidance. And I think that's what analysts have been really razor focused on. Yes, you had a good first 3 months, but what is the trade war doing to you? Both Deutsche Bank and HSBC talked about that forward guidance, about being able to maintain their targets on that guidance. So I think that's a really key takeaway here from these banks.
Well, what are the banks saying specifically about how they are planning to navigate the impact of tariffs?
We got a really interesting vibe check from management at HSBC. And, you know, this is the world's largest trade bank. They have such a history in financing, in facilitating trade. Their business model is effectively under attack right now in a trade war. But, you know, they maintain that their strategy is working. And they kind of, you know, talk about the weakness in the economy right now, the uncertainty, but also this idea of kind of being there for clients. And I think this is kind of the nuanced take that we're getting from these banks, is that in a time of uncertainty, clients, yes, are concerned, but they're looking for people to help them with this trade uncertainty as they potentially need to make business changes.
Beyond banking, later today, 7 a.m. UK time, we're going to get numbers from BP, AstraZeneca, two very different sectors, of course. What are you going to be scrutinising when it comes to the energy giant that is BP and the drug maker of AstraZeneca?
It's a huge week for earnings, and I think BP is going to be really striking because that oil price has been under pressure this year, BP along with it. And I think, we've been hearing good news on buybacks from banks. I think analysts are concerned about the buyback pressure from these oil majors, BP in particular. That's something that's made these stocks so attractive, but that could be putting BP under pressure. They're also very exposed on that international trade front right now. AstraZeneca, their pipeline is going to be in focus, right? That pipeline of drugs as they try to diversify. Cancer in particular is a huge focus. They had some great news last year. Their shares their shares got to a peak last summer, but then have declined about 20%. And so I think management is really going to try to focus on building out that pipeline, that good news story.
Yeah, and the risks around potentially pharmaceutical sector tariffs and the Trump administration. BP stock, to your point, down about 7% year to date. Charlie Wells, thank you very much indeed, giving us a preview as well as a wrap of the earnings that have already come through with the analysis. Of course, a reminder, some of the big interviews this morning. We're going to be speaking to the chief executives of pharma giant AstraZeneca, which has just been set up for you very nicely by Charlie, plus the car maker Citroën, and the brewer Carlsberg, plus Norway's sovereign wealth fund. So plenty of big interviews to stay tuned for. Now, Porsche, in terms of Tradegate pre-markets, being called lower by close to 5%. Potentially an up to 5% drop this morning on the share price of Porsche. That, as the luxury car maker, of course, expected to see its profit margins slip into single digits this year due to those US tariffs and higher costs from weak EV adoption. The German automaker sees return on sales falling to as low as 6.5%, well below its previous projection of at least 10%. The company is also warning of challenging market conditions in China, where first quarter sales fell 42%. Let's bring you back live pictures right now. Mark Carney, the Prime Minister of Canada, the leader of the Liberal Party, speaking after that victory.
Will call for some sacrifices, but we will share those sacrifices by supporting our workers and our businesses. Les défis devant nous sont intimidants, et c'est normal. Les grands changements, comme ceux que nous vivons, sont toujours inquiétant. Nous avons beaucoup de chemin à faire, mais j'ai confiance. J'ai confiance en vous. J'ai confiance au Canada. Because Canada is more than a nation. We are and we always will be a confederation, a sacred set of ideas and ideals built on practical foundations. That we know we're not always perfect, but we always strive to be good. We do things because they're right, not because they're easy. That we see kindness as a virtue, not as a weakness. Most importantly, we know that our strength lies in our resolve to work together as a country. It relies on our unity. On the second day of this campaign, I went to Gander, where on 9/11, they welcomed thousands of passengers into their homes without question or hesitation. I sat down with two of the many heroes of the time, Diane Davis and Beulah Cooper. And during our conversation, they showed me a thank you card that they'd received from a young girl called Ellie, who wrote, "Your kindness motivates me to use my kindness." That tough phrase captures what Canadians instinctively know, that virtue is like a muscle that grows with its exercise. We become just by doing just acts, brave by doing brave acts. When we are kind, kindness grows. When we seek unity, unity grows. When we are Canadian, Canada grows. And united over our country, we have done hard, seemingly impossible things.
Canada's Prime Minister Mark Carney speaking in Ottawa on the back of that election victory. It could be a minority government. We're still waiting to see how the political chips fall. Talking about the intrinsic kindness of Canada and as well talking about the work that needs to be done. He says, I know there is a lot of work to do, but he has confidence in the Canadian people, confidence in the country of Canada. He also, as well as pledging to grow conventional energy and take climate action at the same time. Carney saying that he will strengthen the trade relationships that Canada has with Europe and Asia. Of course, Canada facing those tariffs from the Trump administration. This is a story we'll keep across for you throughout the day, of course. Coming up, as President Trump prepares to mark 100 days in office, we look at the huge impact so far on trade, geopolitics, and plenty more. Stay with us for the breakdown. 100 days in. This is Bloomberg.
Negotiations are ongoing. Also, last week I was meeting Scott Bessent in Washington, and we were also touching up on these issues. But I would say there is also still lots of ground to cover.
OK, that was Valdis Dombrovskis, the EU Commissioner for Economy and Productivity, discussing the state of trade negotiations with the US, between the EU and the US, and the work that continues, of course, on that front. President Trump, meanwhile, is on track to ease some tariffs on foreign parts for cars and trucks made inside the US. The White House made the announcement as Trump prepares to travel to Michigan, the heartland of America's auto industry, to mark 100 days in office. Yes, we are just 100 days in. It feels sometimes longer than that. Our EMEA News Director, Ros Mattison, joins me with the latest. I talk about the length of time because there has been so much that has come through. Whatever you think of President Trump and the team, they have been incredibly active on trade, on tariffs, but also domestically as well on policy fronts, reaching from law firms to universities. What are the key takeaways for the markets when it comes to the action that we've seen and how that compares in a historical context for President Trump?
Well, as you say, it's been a pretty breakneck speed so far for only 100 days, and that seems to have been deliberate. What we know now from our own reporting, this was a strategy to really flood the zone across the board on policies, as you say, tariffs, trade, migration, cutting government spending, cutting the size of the US government through Deutsche, trying to bring a resolution to the conflict in Ukraine, ceasefires in the Middle East, you name it, they're on it. And they're doing it really, really quickly, getting ahead of the courts on it too, by moving so fast that people cannot keep up. So if you think this was the pace that we're just going to get for the 100 days, well, stay tuned. It's probably going to keep going. There seems to be a real push. We know now, from the US Treasury Secretary to get Donald Trump's tax cuts done again by July, even though they don't run off until the end of the year to get his new tax package through. So pushing heavily on that. For markets, the reality is that this is the way this US government operates. So you will get policy moves quickly. You'll get policy changes quickly. You have to be nimble in a moment then of high volatility for markets. Donald Trump is someone who likes to change his mind. And we just can see that, particularly when it comes to trade policy. Again, you were noting that we're likely to get some reprieve for car makers today when he makes his speech in Michigan to mark his 100 days. He's going to give those car makers some relief. That is supposed to be relief that tapers, potentially. So over time, it forces car makers to bring more production into the US. Will that actually happen remains to be seen. But what we can see here is that, the fast moves of the 100 days are probably going to continue.
What do you think? Some of the poll numbers have suggested, the recent polling in the last week or so have suggested that American voters are turning increasingly pessimistic particularly about the handling, interestingly, of the economy by President Trump, which has been one of his key strengths going into the election towards the end of last year. What do you think the priorities are going to be going? What do you think they're going to see as the wins that have come through, and maybe areas where they wish they had performed better? Because in some ways, despite all the disruption, they could claim that they do have countries knocking on the door saying, look, we will make changes to our trading policy as a result of the tariff regime. Do they see that as a win so far?
Well, certainly Donald Trump sees that as a win. I'm not sure if he's introspective to the point that he likes to reflect on what he thinks could have happened better, although he is, again, willing to change his mind. But he will argue that he doesn't need a fully throated trade deal on the table, the big heavy document showing all the bits and pieces. He just needs a framework for conversations to continue, and he'll call that a win. So you will get those announcements that countries will say we've got a framework of understanding, an MOU, of course, and that's what he wants. Then the hard part starts on the nuts and bolts of those deals. But as you say, you know, the polling is showing some concern around the economy, and that's not, you don't need to see that in hard numbers. You can look at it in a sentiment way, and it's showing up already. And so you can see that that's why he wants to push these tax cuts quite aggressively. That's the thing that he's going to say to the US people is, I've delivered for you on the tax side.
Yeah, and there's been some progress on that and some deadlines as well. We see timeframes being announced by lawmakers and members of the Trump administration in recent days when it comes to the tax story. So we'll keep an eye on that as well. Ros Mattson, thank you very much indeed. Of course, our director, EMEA Director of News, Rosalind Mattson. To China now, and of course this is a central part of the trade policy of the Trump administration, but Xi Jinping is facing growing discontent, had faced growing discontent, of course, within China after strict COVID lockdowns. You saw that actually take place on the streets as well, very rare in China, a slowing economy and attacks on entrepreneurs. But that feels like a long time ago. Donald Trump has now handed him a gift to rally support at home, the presence of an external enemy. That story is the focus of Bloomberg's Big Take today. Joining me now from Hong Kong is Bloomberg's Jenny Marsh for the details on today's Big Take. And it's a pretty amazing turn of events in terms of how we think about Xi Jinping and his popularity as far as we can gauge it. But Trump is turning out to be a good thing for China's leader.
That's right. I mean, as you said, you know, in his third term, Xi had faced all this sort of grumbling at home over the COVID lockdowns and then his handling of the economy. And suddenly what we're seeing now in China is actually this sort of groundswell of public support for Xi. You know, we spoke to dozens of people across the country, from local officials who previously have been lying flat, who are now sort of standing up and sort of hopping to work to get the country moving to defend it against these tariffs. Even exporters who have been so hard hit, people just seem to feel this is so unjust, and the US has come after China and really singled it out in such a bullish way that it amounts to a sort of economic attack on the country. And they think that the way that Xi Jinping is responding with strength and by not caving in to Trump is the right thing to do, and they are fully behind him now with this response. So for Xi, it's giving him an awful lot of political capital to continue to dig in against the US. You know, I think the Chinese right now feel they have the upper hand when it comes to these talks. Every day, Trump is sort of intimating that there are negotiations happening between the two sides, and the Chinese have been very robust in denying those allegations and saying that there are no trade negotiations, because from their point of view, the US needs to take down all of the sanctions they've imposed in the last sort of month, and they need to sort of start addressing China with more respect than they have been showing. So I think, you know, for Xi, it does give him more time to dig in, but I think there's also a risk, and he has to balance that. You know, right now the public support is with him, but there have been a series of economist notes over the past week kind of gaming out, like, if this carries on, what will be the hit to employment? And I think Goldman Sachs said 3% of jobs are at stake from a protracted trade war like this. So obviously in the long term, if we do start to see millions of people lose their jobs and unemployment nearly double in China, then that's going to impact the public support Xi has. So it does seem like, you know, for now he has the public with him, and that gives him a lot more sort of staying power and leverage to strike the best deal that he can with Trump, and sort of to push the US to come around to his way of thinking. But I don't think it can last forever in that way.
Yeah, and a 3% drop in employment could challenge the expectation from some Chinese officials, maybe, that the people of China can cheku, or eat bitterness, is one key and a kind of historical phrase that some lawmakers reach for at times of great challenge in China. What does this mean for a potential off-ramp then in terms of this trade war between the two nations?
Well, I think both sides are really keen to show publicly that neither is going to blink first. But I think, you know, actually China has been careful in the trade war never to escalate. So even though we're at 145 and 125% tariffs, China's always gone sort of toe-to-toe with the US and never an inch further. And we have seen reports over the past week that China is considering, perhaps has even quietly introduced already, some tariff exemptions for key products from the US that exporters and businesses in China have told the Chinese government they cannot do without, as they've tried to ring-fence them. And even today, the Ministry of Commerce in Beijing has come out and said that it's open to doing business with some US businesses. This is in relation to the Boeing saga, where China stopped taking delivery of Boeing planes. And so now there are signals that they're prepared to sort of roll back from that a bit and start receiving those again, because it's something that Chinese companies need. Either of those moves, or both of them, are sort of off-ramps, and they are things that Trump could seize on and say, look, the Chinese have now backed down on some of these tariffs, and that could give him an opening then to sort of call up Xi, or, it gives them sort of some political leeway. So I think we have to watch very carefully for any of these sort of small moves that could be very, very useful politically for both sides to try to de-escalate ties from where they are right now.
OK, Jenny Marsh on today's Bloomberg Big Take, the impacts Xi Jinping's domestic popularity, at least for now, when it comes to this trade war. Jenny, thank you very much. Plenty more coming up, including a look again at the 100 days of Trump and a preview of some of the earnings coming up. Stay with us. This is Bloomberg. Welcome back. So President Trump will be marking 100 days, of course, in office. That being marked this week. He's going to be giving a speech in Michigan later today. The number of executive orders that have come through from President Trump just within this 100-day period is pretty historic. We've never seen a number like this, at least in recent records. You have to go all the way back to the 1930s and Roosevelt with his 99 to get anywhere close. Even Trump in his first term came through with just 33 executive orders in his first 100 days. We've had 139 so far. Flood the zone is the tactic and the strategy, of course, we know from his advisors. That was all part of the plan. But that, of course, has kept many of us on our toes, as well as the tariffs and everything else that has unfolded domestically for President Trump and the team. Let's flip the board and have a look at what's happening in terms of how this is all impacting, particularly the tariff story, expectations around US stocks. You've had a bit of a reprieve, 5 straight days of gains. JP Morgan strategists saying there could be near-term upside on big tech earnings and maybe some movement and progress on trade deals, so they do caution that longer term the economic impact could put that to play in terms of keeping that fairly short term. But the short term opportunity, JP Morgan says, is there potentially for US stocks. Coming up, there are plenty of big interviews, including the chief executives of pharma giant AstraZeneca, car maker Citroën and brewer Carlsberg, but also Norway's sovereign wealth fund as well. Plus, Ferrari CEO will be joining The Pulse exclusively from the Norges Bank Summit. That conversation starts at 9:45 a.m. UK time. You can catch those interviews on the opening trade. Stay with us. That show is next. This is Bloomberg.